Welcome to Buffeting, the podcast where my wife Cass and I share our conversations on investing with you as we try to keep compounding capital so I don't have to go back to being a carpenter.
And I don't have to go back working with real estate agents. We hope you find it informative and entertaining.
But we are not your financial advisors and nothing we say should be taken as investment advice. As always, do your own research, which is more fun.
And now, without further ado, on to the episode. Well, we sold the bond short.
It's all done. I know.
How's it feel? How has it been shorting US bonds? I think we were shorting the wrong country's bonds, by the way.
I don't feel too bad because I actually looked for European bonds and I looked for other countries. Like I tried.
I know. I remember being like, hey, the UK seems a bit worse off. Can we short their bonds? And we couldn't.
Yeah, their inflation's worse, you know?
Yeah.
Yeah, but basically we sold our trade. We decided that, you know, like enough was enough and the kind of like risk reward or probabilities didn't seem in our favor anymore. So we cleared the thing. And then it proceeded to go down a little bit more. And I'm like, oh, we're so smart. Yeah. And then it proceeded to go up a lot.
Yeah.
And
how did that feel for you? Well, to be clear, we sold at about 3.3% on the 30-year yield. Which was about $110 or something for TLT. And the whole trade was about a 6x. So we made about 6 times our money off, 12% of our portfolio. That's about what the numbers are. Yeah, in about 7 to 8 months.
Yeah.
Yeah.
So
that's pretty good. We're happy with that.
We be,
very happy with that.
Yep.
But obviously, selling out at 3.3 in like July, August, and this week it went to 3.8.
3.8%, and TLT was almost down to 100.
Yeah.
So if we'd held the position, and we had the options expiring, so I don't feel too bad about.
No, that's right, and
our decision.
Like, I guess it is hard because we had so much conviction kind of for the first 6 months.
Yep.
And we weren't really wavering too much. We weren't even thinking of selling.
We even added to it, and we actually even put a new position on that was
around June.
Yeah.
Yeah. And I guess it was just that period there where the Fed wobbled a bit. And and we knew inflation was going to be coming down for the next few months. So with a wobbly Fed already and inflation looking like it's going away at least.
Yeah.
We just figured time to cash in.
Because ultimately the Fed, the way we've observed them to work is they make noises first. They make a few comments here and there, and then their comments increase, and then their kind of message evolves slowly. So them saying things like, we're really concerned about the economy, it's looking really weak, and
we may be at neutral.
We may be neutral.
We might be able to slow down soon.
Yeah. And that combined with the fact that we had, instead of having 12% of our portfolio in something, we had 60% of our portfolio in something.
Exactly.
Made it very hard to sort of maintain that logical conviction. But we both kind of had emotional conviction. You had more conviction to hold than I did because I was like, look.
I wasn't even considering it. And but that was kind of me putting my head in the sand, to be honest. I just wanted to hold on to the thing. You
think so? I don't know. I think there was good arguments both ways.
Well, I was more so like, really, QT is just beginning. Mm-hmm. We're only 1 month in, but I think that first month of QT didn't really do anything, and I was just like, I know they're
ramping
it up. So, but still, I would have thought it would have done something.
Exactly.
So that. No, we both agreed it was logical to sell. And we still look back on that decision, even now with yields at back to 3.6 or something.
Yeah.
We still look at it and it's, we did the logical thing at the time. That's all you can do.
Definitely. Just got to make the best choice that you can at the time with the information that you have. And that's the hard thing about investing is that you might make a choice, and then it turns out to be the wrong choice, or the right choice. But to me, the right choice is just the choice that makes the most sense with the information that you have at the time.
Yeah.
So that's all you can do. But yeah, we still maintain like a small position, in the 3x TMV ETF.
Yeah, so we still got a tiny bond short, I guess.
Yeah, a little bond short, a little baby one. So.
But yeah, it is excruciating, obviously, being like what that would have been worth with the spike this week.
Yeah, it's true.
Crazy.
That's reality. The reality is, if we'd held it, we'd be looking at not being up like 30%. I think we're up for the year now. We would be up 60 or 70% for the year based on current pricing. So that's pretty significant. But yeah, like I said, I think any investor could see our reasoning why we decided to pull out.
Yeah.
But so this episode is a bit different because we asked Twitter for questions, and I was like, "Hey everyone, got any questions for us?" And the funny thing about the questions, I was going to say, is that they basically cover everything that we wanted to talk about. So I'm not sure. We got like 15 questions, pretty much. And
we got like 300 followers, so I got 15 questions. That's pretty cool.
That's a good.
I feel like we know every single one of.
I know.
The people on Twitter. It's like.
Yeah, I'm really close with that bot. That's like a, frog character or something. But yeah, so questions. Take it away, my lovely wife.
So the first one is from Henry.
Mm-hmm.
You got an update on the waterproofing business from season 2, episode 1.
Yeah.
I think this is interesting and very cool. So do we, Henry.
So do we. I think it's very cool. Yeah, it's getting really fun now, isn't it? The business.
Yes.
Like it's past the stage where we're having to do a lot of physical work and actually like get involved a lot, and it's more about us like monitoring and sort of
guiding. Yeah, and it's kind of past the proof of concept stage too.
Yeah.
So it's getting serious, I guess.
It's getting serious, and so we've gone from having one person working for us to having 2 full-time people and a part-time person as well. And I would just say that what we have now is kind of like what looks like a little financial module. So we have one car, we have a set of tools, we have 2.5 employees, and that's like a little business unit, I would say. And we're starting to produce quite good numbers off that business unit, and to the point where I feel like I can start to see what a larger business might look like financially, which is really exciting to see that, and to see like actually this many assets are generating this much profit, and that's a good ratio. We've only had I would say 3 months, 2 months maybe, of solid, fully trained up employees and solid work and working efficiently. But yeah, it's looking good and we're enjoying it, and there's been no disasters. So
yeah, it's working. Everyone's happy. We had like a little annual meeting, did an annual report for it.
Yes, we did. Yeah. So yeah, it's going well. For anyone who doesn't know, it's basically like a construction business. The actual business itself, we just fix people's leaks, and we do something called waterproofing, which is whenever someone renovates their bathroom, they have to like put a special coating down to make sure that any water that goes in doesn't like leak out. And surprise, surprise, when people are deciding who to use for their waterproofer, they go with the company that's looking really professional, which is kind of what we were going for the whole time. Like we always thought that if you're going to be renovating your bathroom and spending $30,000, do you spend $500 or do you spend a little more than that to actually get someone to do that special job that guarantees you won't leak. So far that's working well, and the main point is that we don't have any issues with the work itself. So yeah, it's going well.
Yeah, it's a cool little concept. It's working. And it's nice to have this separate to our portfolio as well, because at times they kind of hedge each other.
Definitely. And the one thing I was going to say is that the business is now at the point where it's becoming so reliable and so consistent that we can look at the business and we can look at our investments and we can start to move money around between the two and to actually make investments in the business that have a good return, as well as investments in our portfolio that we're excited about. Like you can never beat the liquidity of your portfolio, being able to sell, positions and move them around. But the business investments are like quite high returning investments. Like whether that be training someone, whether that be buying vehicles or good tools or investing in like good advertising, like they seem to actually return good percentages. So that's what it's about, right? That's just...
Well, yeah, we could potentially see better returns if we invest our money in our business as opposed to anywhere in the market right now. So...
Exactly. But that's the business.
Going good.
Next question.
Iron Mick. Anything you two have on your radar? I recall cannabis was a market you wrote a bit about.
Yeah, cannabis. Probably the biggest thing that I would say we've been spending the most time on, apart from the business, is just learning a lot about the dirty oil.
Yeah.
I wonder how I first got interested in that and how that started. I mean, there obviously is a lot of stuff on Twitter about energy.
Yeah.
But I think when the gas spiked in price and Russia started playing games with Europe with the gas, we did a lot of research about Russia and everything, and then that's led to us learning a lot about energy markets and commodities, and then learning about OPEC and the oil markets and how much oil we use and all those questions. And basically the thing about making commodities investments or investments in the price of commodities, the weird thing about the price is the price of a commodity is not the same at all as the price of a bond. So even though both those things move, every day, they might change in price. The reality is that the price of a 30-year bond is definitely a lot to do with what's going to happen over the next 30 years. Whereas the price of a commodity is kind of the balance between supply and demand. That's the thing about it. It's the balance between supply and demand. And as you can look at the price of oil, for example, in COVID, did that crash because of trading? Well, probably partially, but it also crashed because demand crashed. So you have something basically in the commodity market that forces the price to move, which is really kind of interesting in the sense that if you're trying to invest in this, like the way the world is now, where it's pretty dangerous and there's a lot of weird stuff going on, it doesn't really feel like a very safe time to be making like buy and hold stock investments. But looking at these like commodities and being able to use options and other futures and stuff to benefit off the moves, it kind of feels a bit safer, I think. And that's why I like learning about oil has led us to kind of feel like there's a big supply-demand imbalance building because there's been a lot of weird stuff going on.
And we also, I guess, gravitate towards situations with catalysts, clear catalysts, where you can be a little bit more clear on the timing.
Yeah.
I guess that's something I learned from the bond short, I guess, how you really have to think about the timing. Really, and like give yourself as much time as possible because things may take longer than you could ever imagine.
Exactly.
Whereas with this oil thing, there are so many catalysts that it's like if just one of them goes off, geez,
it's crazy.
Yeah, I can put that supply demand balance really out of whack.
Exactly, and the supply demand balance being out of whack, that's what's going to cause the price to move up or down drastically. And yeah, there's a lot more on the sort of like cutting away of supply and pushing up of demand scale than there is the reverse of that.
Yeah.
Like Russia itself produces like 10 million barrels a day. It was producing 10.5 before the war, and now it's producing 9.5. But that gap has just been filled by the SPR. So as Russia has cut its oil exports and production, Biden was like, all right, well, we'll feed our reserve to fill the gap to produce, I don't think anyone doubts that it's totally to do with politics. Like, the SPR is going to stop, which is the government's petroleum reserve. It's going to stop feeding into the market like a month after the election.
Oh, wow. Go figure.
Crazy. Just a coincidence? I don't know. But yeah, like 1 month after the election, it's going to stop. So what we're looking at is towards the end of the year, when you've got winter in Europe, which is not something that's a usual thing. Like, it's not every year that the gas price is so expensive that Europe might have to actually switch to burning oil for power to generate heat. So that's like a total source of demand that, isn't there usually. What else? A lot of stuff.
So you've got China possibly reopening.
Yep.
We've got all countries basically just have about 60 days
pretty much
at most worth of oil in storage.
Yeah.
So if China does come back online, that could add 1 million barrels a day to demand.
Yeah.
Supply side with the hurricane in the US.
Yeah.
That could again reduce the amount of supply. Like, everything is kind of on supply getting restricted, demand going up.
Exactly.
Around the same time of year.
Exactly. So not that it's a guarantee that the price is going to increase a lot, but there's also other factors like OPEC, for example. Like, OPEC has said that, if the oil price continues going down, they're going to cut production. Like, they're going to force the price to go up because they don't think that that's a high enough price, that justifies them pumping as much as they do. And like, that's probably a lot to do with their own government budget being stretched with inflation. Like, every country is going to want to maximize the amount of money coming in from their, from their assets to pay for their government expenses. It's a pretty crazy supply demand imbalance situation, and something we're doing a lot of research on.
Yeah.
That's for sure.
Yeah.
But we haven't invested in any oil equities yet. So we have got positions in 3x ETF and some options positions. But we haven't bought any oil stocks yet, despite them all being really cheap. Like, they're all, on very low multiples, and they're all going to buy back stock, and they're all paying dividends, and they're all in pretty good financial condition. But at the end of the day, like, if the oil price spikes and then goes back down to 60 or 50 because we are in a massive global recession, then like, I don't really want to be owning those stocks. You know what I mean? Like,
the future's just too hazy for the long term for us.
Yeah.
We can only really maybe see 3 to 6 months out, or have any idea what it might look like anyway.
Exactly.
But as far as like 2 to 5 years out, we have no idea what world we'll be dealing with. So oil is an absolute geopolitical minefield at the moment.
Definitely.
And a price spike. I mean, even didn't Yellen come out and say there's possibly going to be a price spike in oil in December?
She said that, yeah. Because she knows that at the very same time that they're cutting off the SPR, Europe is going to be, consuming more oil for heat, possibly at the same time as China is starting to reopen their economy and use more. And maybe at that same time, Russia will be trying to inflict maximum pain on Europe, and will just cut that, 5 million barrels a day. Because when I was looking at the amount of oil that Europe buys, Germany, Netherlands, Italy, France, they all buy heaps of Russian oil. And like, yes, they do have reserves, but I think that Russia could very well just sell that oil to China to increase their reserves. Like, China has 1 billion barrels of oil in storage, and if they just bought all of Russia's oil for like a few months, even if they didn't actually have to move the oil, you know what I mean? Like, they could just, because I
store it with Russia.
Yeah, I mean, China has some of Iran's oil in storage for Iran. So obviously there's like a bit of the oil can move without moving. Like they could be paying them for the oil, but it doesn't have to move. So,
and India will still buy Russian oil as well.
Exactly.
So they'll still find buyers for their oil. They're not really up against a hard wall.
No. But you've got looking at Europe, who's got,
they are
60 days of supply, and that's it. OPEC is topped out. America produces just enough for itself, and it can't bleed its SPR down any further. They might want to restock their SPR as well. They might be adding to demand too.
Meanwhile, the hurricane might shut down their production.
Yep. Yeah.
But I guess the alternative, the other side of this, obviously, the same argument we have dealt with on the bond short comes back again. Great recession, deep depression. There's not going to be enough demand for oil because we're all going to
be driving Teslas.
Stop driving anywhere and stop doing anything in the economy. We're all just going to hibernate.
Tesla's going to totally convert all the world's cars and plane fleet to electric battery. It's
going to go from 1% to 90% of vehicles, is it?
Yeah. It just doesn't work. And the weird part about this, there's another question about this later, but we think climate change is real and we think it's a serious problem, and we wish there was a good, easy solution, don't we?
Yeah, I thought there would be one. Honestly, like everybody else who was too ignorant to really research into it. As soon as you do, you realise everyone's been ignorant of the problem.
We've been voting for it. We've been voting for people who have...
But there's no practical plan in reality. So, sorry, we're going to be needing oil for a long time.
Yeah. And the only way it looks like we're going to be able to get out of this whole climate change thing is with some new technology that we haven't invented yet. That's kind of the way it looks, because the amount of materials and the amount of emissions to be created building all of these solar panels and wind turbines and stuff, we just don't have the supply at the moment. We'd have to have a massive mining boom just to build the stuff. So not looking good.
No, but that might be next season. The big oil long.
The big oil long.
I don't know.
And
we've just got futures for now, but
we'll see.
Okay. So that's on our radar. Okay, next question. Matt Hansen. There's a few questions here, actually. So,
nice.
What were some of the pros and cons in making your bond short investment public?
I think it was mostly just pros. I think, pretty much. Yeah. We're not sure if we're violating the law.
We haven't heard from ASIC yet.
Yeah. We heard someone who was in Australia who was putting out podcasts and research, got a letter from ASIC, but we have no idea if we're, by putting our views out there, we have no idea if we're doing the wrong thing. You can't tell. This is not advice. We're just talking about what we're doing.
Saying, please don't follow us.
Please don't follow us. Make up your own mind. If you're saying that, how can you be?
I don't know. I think it's just been good too.
I just like putting my best idea out there and seeing if it gets criticised, because I feel like I really am just trying to make sure we do the best thing we can. And if that means that somebody smart sees what I've written or what you've written and responds critically but correctly, and we change our mind, that's
so valuable.
I should be paying for that. It's so valuable.
It was nothing but helpful, because you did get a bit of that. A few people asked a few good questions or sent through more information, and we changed from HYG and LQD over to TLT. So
Macro Alf messaged me privately. He was like, buy bonds.
When buy bonds, Alf?
I never said that.
He never. Apparently, I don't know. Everyone thinks he was on Team Transitory people.
He was on, buy bonds, wear diamonds or something, or is that Raoul Paul? But there was a lot of stuff that a lot of people who kind of he's alright. He's some good stuff.
He's alright. Whatever. Yeah. Talks about pizza. Who can hate him?
You can hate him. Yeah. But as far as pros and cons of being public, no, I don't think there's been any issues.
No, pros. We've learnt a lot. If anything, the pros were we got to see the other side of the argument.
Yep.
Which helped so much.
For sure.
Because I'm sitting here thinking there's actual legitimate reasons why you would want to buy bonds when they were at 1.9%.
And inflation's 8%.
6 months ago.
Yep.
And we got to see all of those reasons.
Yeah.
Those reasons were sent to us with the charts and graphs and reports and and it was all bullshit, like really.
Yeah.
So when you can really understand the other side of it and there's nothing there, you can just have way more solid conviction because you know more. So that's good.
And that's what we feel pretty good about because we know that we didn't sell the position. We didn't close it out because of Twitter scaring us because we thought that there was... Because one day I just read Kathy Wood and I was like, you know what, love? Like, this is making a lot of sense. Like, you know, that wasn't what happened. Like, what happened was that the person who's in charge of what the rates are going to do, Jay Powell, started to say things that, you know, were not really fitting with what he'd been saying before. And the fact that even, you know, Joseph Wang, who really understands the Fed, was getting very concerned.
And basically calling him a Burns.
Arthur Burns, you know. For those who don't know, Arthur Burns was the Federal Reserve Chairman in the 70s.
Pre-Volcker, who stuffed it up.
Pre-Volcker, and in the 70s they had, you know, inflation, but they didn't get their rates high enough, so the inflation kept going. And then in the end, he got sacked and a guy came in and fixed the problem by, you know, doing the right thing, which is to raise rates higher than inflation. So
I heard someone describe Volcker though. Was it Druckenmiller?
Could be, yeah.
Describe Volcker as a madman.
Yeah.
Like,
yes.
Or maybe it was Dalio.
Druck
did.
Yeah.
When he saw him in the 70s on TV, or in the 80s, 82, he's like, he's a madman.
Yeah.
He's gonna break inflation. I'm like, I've never looked at Powell and said he's a madman.
No.
Like, there's a long way to go.
No.
But anyway.
Yeah. Yeah.
But he looked like Arthur Burns, and we're like, we're pulling out.
We're like, oil's coming down, inflation's gonna go off the ball for a couple of months.
Yeah.
You know, we will get a recession, and at the same time, Jay's starting to say things like this, and also, by the way, it's more than half our portfolio.
Yeah, we're happy. Let's pull out now.
Yeah.
So, but any cons? I don't think there was any cons. Well, for me, luckily, I had you to bounce concerns off, because the arguments did get to me at the very beginning, start of the year. The arguments of like demographics.
Yeah.
You know?
Yeah, sure.
The confusing stuff that I couldn't quite
Yeah.
be like, is this legitimate? Like, and you just,
so confusing,
you've seen so much of this stuff. You just know when to not let it get to you. But that would have been a con if I was trying to do this by myself and doing this publicly. I never would do anyway. But the con would be that would have rattled me probably.
Yeah, I think the reason why, and it rattled me too, like it rattled me, and then I had to like research it and prove to myself that it didn't make sense, you know, and that like demographics haven't changed to create the inflation. The inflation's been created by too much money and COVID problems, and you know, demographics are a constant force across the economy. So it's not going to be like all of a sudden the demographics are going to overwhelm the inflation and just it's going to come down, you know. So, but it took a few weeks to get to that conclusion. That's for sure.
The other questions were, was it helpful to have feedback of others, or was it challenging psychologically? I guess we've answered that.
Yeah.
Did you enjoy the process of being open, or did you feel pressure to keep your conviction during times of doubt?
No, I don't think so. I think we're pretty good like that, where we know that changing your mind is... Yeah, it's just Druckenmiller who's so clear about that, isn't he? Like, he always talks about how important it is to, you know, change your mind, and he could love something one day and then he could be totally out of it tomorrow. Like, that's what happens. And
and that might sound crazy, but I can understand that, because there might be one piece of information that you hadn't seen before that changes it all.
Exactly right. Yeah.
And will you be coming to Berkshire 2023 meeting? Possibly.
Let's see how the oil thing works out.
Exactly. We would love to.
Yeah, I think so. I really do want to. And we want to do a bit more research on the cannabis companies too.
Yeah.
And sort of look into those businesses and see how they're going. So
Yeah, do a little tour.
America would be good.
Very good. And we want to see Buffett and Munger while they're still with us.
Definitely.
If the Queen's taught us anything at all.
If the Queen's...
Time is short. So yeah, maybe. All right. Finlay Smith, your current thoughts on Air Wellness? Our cannabis company that's down 90%.
85%. Yeah. Well, we don't think that it's a permanent loss of capital necessarily yet. That's probably the...
No, I just said down. We haven't lost it.
No, exactly. The price is down.
It'll come back.
Yeah. Well, yeah. It's the situation of the whole cannabis industry is kind of interesting because over the past 6 months, they've gone from like generating like really good revenue growth, generating really good numbers, like 10% growth per year, more than that probably, to the last 6 months where the revenue's just gone flat. And Air's been like building out capacity in their business. So they've been spending a lot of money on grow operations, and they've been investing in stores and all that kind of stuff, which you have to do. Like that's what we've learned from our business is the kind of hard thing about business is you have to spend ahead of growth. Otherwise, when the growth comes, you're kind of screwed. Like you have to get ahead of it. And that just applies in our little business and in massive businesses too. It's the percentages are the same. You have to get ahead of it. So the good thing is that Air has, according to them, they've finished 95% of their capital spending now with what they want to spend. So it looks like financially, from what I can make out, and obviously cannabis companies, their financials are very hard to make sense of. So yeah, I spent a lot of time looking at their cash flow and stuff, and I think that by the start of next year, they should be able to be at least cash flow positive, so they're not in financial danger, and then they should be able to weigh out this temporary slowdown in revenue, which they've attributed to like macroeconomic factors, but I think it's more to do with the huge amount of cannabis that's been produced in California over the past 6 months. And like the fact is, you're not supposed to ship cannabis around the country, but they're not really taking much of a risk by doing that. So when you get an oversupply in one state, then it's pretty much going to make its way around the country. And even though Air Wellness is not in California, I'm sure that there's a lot of...
Their market is kind of being flooded with Californian weed.
Yeah.
Through the back alleys.
Exactly.
Which is really crap. Like...
Yeah. Well, it's illegal, you know.
Yeah.
So
it can't be a sustainable problem, you would think.
Yeah, oversupply in commodity industries doesn't last forever. And the cost and the skill to grow like high quality cannabis, like from our research, it's very difficult. But whether the people are interested in high quality cannabis or that's going to be something that happens over time, like we kind of have our own thoughts about the industry. We kind of believe that over the next 5 to 10 years, the new cannabis consumer is not going to be somebody who, you know, wants to like roll a joint or do bong hits. Like that's not who it's going to be. It's going to be in drinks and that kind of thing. And like we're kind of looking for the Coke of cannabis, because like if you think about what Coke is, it's just sugar and caffeine together. It's got a, you know, chemistry and it's got a sensation and stuff, but that's all it is. So yeah, I think that over time that there could easily be those products that are really really fit with the consumer well, I guess. So that's why it's smart for Air's focus is all about the quality of the plant and really keeping that standard. That they've won a lot of awards for their Kind brand and their Lit brand. So if they can maintain that, then, and quality cannabis does, you know, fetch a premium as well. So if they can maintain that and they can stay out of financial trouble, and then we maybe get some banking laws through eventually, then we should be okay. And, you know, it is what it is. That's what you do with investing. You invest in things where there's risk, and when it goes against you, you just got to take it, I guess.
Yeah.
So.
Yeah.
But you feel good about Silly.
Oh, I do. Yeah. It'll be interesting to see how it's tested if we do hit a recessionary period. But
definitely.
Yeah.
We'll see.
Okay, so PN Value Investor. Great to hear your thoughts on any opportunity left shorting TLT further. knowing the Fed is potentially aiming for 4.5% and higher in 2023, and which still hasn't been priced in by the market.
Yeah, maybe. Like, we still have our small position, which is about 5% of the portfolio in the 3X ETF. So, like, inflation's still really high, and if the oil price comes back, that's the funny thing about it, our oil price investment, is that if the oil price comes back, then with it is going to come back high levels of inflation as well. So that will continue, you know, the Fed hiking rates, and that will continue to like potentially shape people's opinions about the next 30 years of what inflation might be, I guess. So it's a bit less certain, but yeah, I think there's still could be something in it. I don't know. It's not financial advice, but you know, it's we've still got a position. So
yeah, I definitely think there's still runway in it. I just don't want to be in it with an expiry date anymore.
No.
Because things can change so quickly. Like even looking at what happened with the pound today.
Yeah.
And
so fascinating.
British bonds.
Yeah.
Like, so they turn around and start easing straight away.
Yeah.
And that even affects people's perceptions of what the US is going to do. So it drops, the US bonds drop from 3.8 to 3.6 on what the Brits have done.
Exactly.
So like you have no control in how sentiment can turn, and it's the sentiment that's dictating, you know,
if you have
the value of what you're holding.
If you have an expiry, that's the problem we have with these options investments is, yes, you can make these great returns, but it's so hard having a deadline, you know, and as it comes closer and closer, as the price goes against you, as it did with us, you know, having to make that decision of, do we sell out now? Do we hold on? You haven't, that's what I struggle with the most, is there's no like data that I'm aware of that can actually help me make those short-term buy-sell decisions if you are in like a trade like that.
And sometimes logic does not matter.
Doesn't matter.
It does not matter what's right. It does not matter what the facts are.
Yeah, exactly.
So, I don't like being in those kind of positions.
No, I know. But
yeah, there's definitely still runway in it. And whoever held, well done.
Joseph Wang held. Yeah.
Wang held, yeah.
Yeah. He posted his portfolio. I think he's up like 130% this year. I mean, that guy should start a fund after this. I think he's got some real skills.
Yeah. Well, the ability to like fully understand the mechanics behind the biggest central bank in the world.
Crazy.
Okay. PN Value Investor also asked about shorts on banks such as CBA. And we did have another question similar from Finlay Smith about the Australian NZ housing market.
Yeah. Well, the price of a house is pretty much, I think, just the average income and whatever the interest rate is and how much the average income can borrow based on the interest rate. So that used to be 2%. So obviously if you're borrowing and you're only going to make payments of 2% of your mortgage, then that's going to be a much lower payment than now, where it's 7% in America. So the 30-year mortgage in America is now 7%. So even though they have a massive housing shortage in America, and we have a massive housing shortage in Australia and New Zealand, ultimately it's people have to be able to afford to pay the prices that people are trying to sell for. So I would not touch it with a 10-foot pole.
Would not touch the housing markets in Australia and New Zealand?
No, until the rates have stopped rising and inflation is getting under control and prices have fallen enough to sort of be in balance with that, I guess. But
with the rapidly rising interest rates and most of our country in New Zealand on variable rates, we think there's going to be carnage in the housing market. But we have thought that about Australia for a long time, but there's been no catalyst to push interest rates up like there is now.
Exactly.
So,
and look, again, this is what's incredible about the British pound situation, is that they're now talking about potentially raising rates 2% in one meeting, 200 basis points, because their currency is falling. To stop that from happening, they're thinking about raising rates 2%. So imagine if our currency started to fall faster and faster in Australia, and the Reserve Bank's having to make the choice between, do we raise 2%, or do we let our currency fall, which causes like many other problems.
So basically, you've got to choose between a housing crisis and a currency crisis.
Exactly. So, do you want to be in a situation where you're holding an asset that's illiquid, that's debt financed, that you need to sell to another person? And in Australia, most property investors, thing to do has always been to buy multiple properties on interest only. So it's variable debt and interest only as well.
Yeah.
And the interest rate is obviously not in your control. And now it's not even in the Reserve Bank's control because the currencies are moving around, and that could easily force them into doing something with that. So yeah, we have the CBA short because that's like the most expensive bank, and it's a small position because I think, like someone on Twitter said, it was a joke, like it wasn't serious, but just in, the Fed, the RBA is easing by buying Sydney apartments, like
off the plan apartments.
Yeah. Like, I wouldn't
that doesn't sound like a joke to me.
No, like I wouldn't be surprised if at some point the government steps in and starts buying properties, for public housing or something. Like if there's I wouldn't be surprised. So again, it's how do you short something where the government could step in and change the like dynamics of the market? I don't know. It's just dangerous, but we have a position, so yeah, very interesting.
Yeah. Mark Anderson, what's the plan for investing the bond profit?
Yeah. Well, most of that went into the oil. Well, about half of it has gone into new things.
Yeah.
We also have a 3x ETF NASDAQ short position as well. We've had that for about a month now. And we have the 3x oil ETF long. And I think we still have about 35% portfolio in cash. So no new stock positions at all. Just hedges, just like protection, basically. Trying to protect ourselves basically from what's happening.
It's like, and should that cash be in gold or should it be in cash?
There
That's
you go.
the question right now.
Should be in Bitcoin.
Oh boy. It's the first time today that we've ever seen. Yeah, we can see how people will run to that for a safety.
Could there be a part to play in that? Yeah, with what's happened with the
central
UK
banks falling. I just didn't. I would have thought a lot of crypto coins would fail this year. I didn't think we'd see a currency
going that way. Yeah,
going that way. A big currency.
Yeah, I'll be surprised if we,
we're not going to buy Bitcoin, but maybe calls on Bitcoin.
And maybe gold, because gold has been falling with everything else, so that could be interesting.
Yeah.
Yeah.
Speaking of falling, lovely SSM would like to know how far down do you think the S&P will get to this year?
No idea really, but yeah, we think if you just do that thing with like bond rates versus the return you get from investing in the NASDAQ as a percentage of like the earnings, then it could be down a lot more than now. But yeah, I'm not really sure exactly I wouldn't put numbers on it, but I don't think it's going to be up. Yeah.
Yeah. Yeah, we've done one S&P short, but that was like stupid.
That was like a year and a half ago.
That was so dumb. That showed how little we understood about macro and the Fed.
I know. I think we've said like next time, maybe in like 40 years time, when again we go through this cycle and we've got a government that's going to be, maybe it'll be like the Indian government. The Indian government will be like the reserve currency of the world.
India, wow.
Well, if you had to pick one, I would pick India. If you had to pick like who's going to be the most economically powerful country in the world in 40 years time.
Yeah, possibly.
I'd pick India.
Yeah.
And I don't think
the demographics look better.
Definitely. Great population, great growth, terrible soil situation, food situation. They, big population, hard to keep fed and everything and cool. But as far as, hardworking and disciplined and all of those things. Like for sure, India's amazing. But
there's a guru looking after that, I think. Don't have to worry.
Definitely. But yeah, as far as if that happens in 40 years' time, same situation, we won't be shorting anything until the central bank stops printing money and buying bonds. Probably won't be shorting anything.
I think that's probably a good little hint we've
lesson.
picked up.
I think so, yeah.
Things will go up while the Fed prints money.
Yep.
Cannot go down. Okay. Mark Durrett would like to know how to gain exposure to oil commodity prices without supporting fossil fuel companies.
That's, interesting question, eh?
Yeah.
That's because as people who do think that climate change is serious, and I wouldn't want to do anything that, we're not at that stage yet financially, but I would never want to do anything that
actively supported oil
actively
production.
helps to produce something that's, but at the same time, we do need to be really careful about how we transition, because if we do it in a poorly planned way, it's going to be disastrous for...
We won't actually be doing it any better than just using oil.
Yeah.
We'll just might feel a bit better about it.
Exactly.
But it's not practically achieving anything. So...
Yeah. And I've been reading a book about, I forget what it's called.
The Big Switch.
Big Switch, yeah. So that's talking about how Australia could switch from, fossil fuel power to climate change friendly power, carbon neutral and all that. And the thing about the book is it's very well argued and full of information. It's really interesting, and I'm really learning a lot reading it. But if Australia has a perfect climate change policy that's net zero, it makes absolutely no difference if the rest of the world doesn't do anything. So the idea of can Australia do it? We can do it. If we just put enough.
Yeah, our whole country's a solar panel.
Basically, basically. I think that if we just took the square meterage of all our roads, which is not very much over the whole planet, over the whole country, and put solar panels the equal width beside all the roads, that would be we'd be a net exporter of energy. We just would have so much energy, and we're not even covering much. But that wouldn't fix the problem. The problem is a global problem. So, yeah, it's interesting to learn about, and I hope I come across something that...
The question is, if we fill all of the middle of Australia with solar panels and plug a big cable in Australia to the rest of the world, can we power the world?
Yes. Yeah, that was what the numbers say. If we fill, some huge amount of solar panels in the middle of Australia and run cables to everywhere, like a generator, then that would probably work.
But I guess going back to the question, you're not supporting fossil fuel companies by buying stock in them.
No,
you're not changing it. You're swapping ownership with another person.
Exactly right. Yeah.
You're not changing the outcome for the company at all.
And even if you apply that to a massive scale where you say, okay, well, if a fund manager buys stock and pushes the share price up, that doesn't necessarily mean they're going to invest more in production, because ultimately they want to have production, have supply equal demand, so the price stays somewhat stable, I suppose. So yeah, it's not clear to me. I mean, you wouldn't give them more capital to do expansions and stuff, but at the same time, we just got to be reasonable about how much oil we need to stay warm and keep everyone employed while we try and do this changeover, basically. So
yeah. And maybe US producers, even if they are funded by your capital, maybe they do produce in a more ethical way than other countries would. Which it
seems like they do. So, a mine mine in Canada is going to be run a lot better than a mine in
This is the problem you run into when you try and apply ethics to investing. And there's so many this is where ESG has gone wrong. Because you can't just tick boxes and be
it's too complex.
Some things aren't that simple.
No. And when you're playing with, something as serious as energy, which because we've had it so good for so long, we've always had abundant energy, I don't even know what it would be like to not have power half the day, and, how that would change things. It'd be pretty crazy. But maybe Europe's about to find out what that's like. And that's what scares me, because if they people do find out that, okay, that's what it's like once we start doing things in an ESG way, we're going to have power shortages, then what's that going to do to people's like long-term persistence to actually solve the problem? Because this is a problem we have to work on consistently for the next 30 years if we're going to solve it. And if you're just doing, you know, like ESG stuff, which causes price spikes, and you haven't got the renewables ready when you're cancelling the coal and all this kind of stuff, like, I know there's a lot of smart people who are doing it very seriously, but politically it doesn't seem to be the case, you know? So
no good answers. Yeah. And that's about it.
That's about it for the questions.
Yeah, the only other one was how does it feel selling at 3.3 and seeing 30-year at 3.56 today?
Terrible.
That was from me.
That was from you.
I wasn't going well with it that day. I think, that was the first day it had started to really turn and spike. And I was like, I knew it. Should have held.
Well, that's the thing. Like, you were on the side of it that, you know, that you were more like, oh, maybe we should hold. And so, yeah. But we both
That was
decided.
just emotional, though.
Yeah.
Because the logic at the time did not support that argument, which after 2 days I came around to.
Yeah.
And agreed, yes, that's right. So it's very easy when you have situations like that, though, to want to wallow in misery for a little bit and like really you just can't stop thinking about how much money you left on the table.
Yeah.
And it's just not helpful. You've got to move on.
Keep focusing on like what you can control, which is the next thing we're going to do.
Yeah.
So, yeah.
Cool.
Very cool. So, thanks everyone for the questions. It's really good. And, I guess we'll see you for season 3.
Season 3. Stay safe. Good luck out there.
Yeah, and if you're in Europe, you know, all the best and stay warm. If you got this far, thank you so much for listening. We really hope you enjoyed the conversation.
Now, if you'd like to become my 22nd
or my 43rd
follower on Twitter, links are in the show notes.